Right now, we have yet another enriching panel for our FinTech Demo Day. The topic for this session is facilitating innovation for corporates and startups. Enjoy the session.
Hello everyone, this is Nicola. I'm the CEO of DXDF, Decentralized Traded Fund. At DXDF, our mission is to revolutionize the traditional asset management industry with the inclusion of digital assets in order to unlock new capital and talent. We are building a simple and secure digital asset management platform that allows investors and portfolio managers to interact peer-to-peer with a decentralized custody. DXDF was founded in 2017 by a group of professionals with a long experience in traditional banking and asset management, as well as hands-on experience building technology solutions for the financial industry. We also have a number of partners in our ecosystem that help us achieve our long-term vision. We try to solve two problems. The first one is what we call a delegation impossibility. Who owns the keys owns the asset. By nature, a digital asset, in order to transfer investment decision to another party, it's also necessary to transfer the ownership of the asset. And we believe that this is not right. Our solution doesn't require to transfer the ownership to another person, and this is an important feature to keep the asset of the investor safe at all times. The second problem is that traditional asset management is very inefficient. There are a number of intermediaries between investors and portfolio managers that add very little value to the system. The fees that this intermediary charges every year is in excess of $30 billion US. Our solution instead connects investors and asset managers directly without the need for any legacy databases. We also enable a fully decentralized custody while allowing portfolio managers to rebalance their funds thanks to the blockchain technology and our internal mechanism that uses arbitrageurs to keep the entire flow running smooth and efficient. By cutting the middleman, we are making the asset management fully meritocratic. Our platform was launched in September 2020 on the Ethereum mainnet. Portfolio managers can now launch passive funds like indices, and users can invest in those funds by simply connecting their digital wallet. We are also working on new features, for example, creating a decentralized exchange and also allowing rebalancing of funds so the portfolio manager can actively manage their funds. The traction in the first month has been pretty good. We had more than 50 portfolio managers registered on the platform and more than 100 active users. We also had more than 50 funds created, and we are in excess of 1,000 followers on our social platforms. We're building on our brands. We concluded F10 Incubator in October 2020, and we are now part of the Algorand Accelerator, an accelerator program where 10 startups in Asia are part of these programs. We're also working very closely to financial institutions to create use cases and build proof of concept to bring traditional financial instruments into the digital world. In particular, we're looking at tokenizing some financial instruments to allow financial institutions to distribute these more efficiently at a fraction of a cost, and also to allow the fractionalization of these products that's typically not allowed in traditional asset management. We concluded a seed round last year in November 2020, led by SG Innovate and Lunix, a VC fund here in Singapore. We used those funds to build our platform and to get to the launch on the mainnet in September 2020. We still have a runway for approximately another 5 to 6 months, but we're looking to raise new funds and close the next round in Q1 2021. If you're an investor and like our idea, please get in touch. You can find more details on our website, dxdf.com, or you can reach out to us by email using protocol@dxdf.com. You also find a lot of information on the main social platform. Thank you very much, and looking forward to hearing from you.
Hi everyone, I'm Pranay Jain, the CEO and co-founder of EnterpriseBot. Thank you for inviting me. I would have loved to be there in person, but of course with Corona, we're all getting used to this whole new virtual environment. At EnterpriseBot, we are here to solve a very crucial problem that I think all of you have faced. Just remember the last time you spoke to your insurance company, bank, airline, or any other customer service center. What you heard were the words, "Your call is very important to us." Then you heard some beautiful elevator music for at least 5 to 10 minutes. And then they probably now have started adding the words, "Oh, because of Corona, all our stations are extremely busy. We really apologize." The fact of the matter is most of these queries actually are not very complicated. Most of them can be automated. As per our surveys, more than 60% of requests that actually are coming into contact centers actually are repetitive and can be completely automated. Think about that for a minute. Today, an enterprise, for every request that comes in, spends anywhere between $5 all the way up to $12, depending on where you are in the world. What we're able to do is, using artificial intelligence, reduce that cost directly to 10 to 50 cents, depending on your volumes. What that means is not just big savings for enterprises, which of course in today's Corona world, margins are extremely important. But what this also means is you get a significant improvement in your customer experience. Your customer gets a response immediately. Now, don't get me wrong. Nobody wakes up in the morning. If you ask a customer, "Oh, did you wake up in the morning and, did you actually dream of, oh yes, let me speak with a chatbot, or let me speak with an AI agent that's built for email or voice?" Not a single person's going to say, "Yes, that's exactly what I dreamt of." And that's not what we expect. Think of what exactly happened with the ATMs. We love to go to the teller. We love to go to the bank, meet your personal advisor, or even if it was for something as basic as cash withdrawal. Today, your number of branches have kept reducing because ATMs have become so effective. That's kind of what AI and bots in customer support is. It is your channel to actually effectively resolve your customers' requests in the fastest possible way. That's one of the things that, is always misunderstood. But it's not just the customer or it's not just the enterprise's fault. To a great extent, the bots or the AI out there is actually very, very mediocre. Most bots that are out there, more than 90% based on our survey, actually are mainly FAQ bots. This actually reduces NPS rather than increasing. And that's one of the major things that, at EnterpriseBot, we're looking to solve. What we do is not just understand the user's request, but we actually have a no-code platform that allows you to execute the end-to-end process so you solve the entire problem. And that we've seen really improves NPS. We have one of the highest satisfaction scores, and we keep doing A/B testing to really make sure that we understand the customer and the customer's needs. If you see, that's something on any bot. So if you go to London Northeast Railways in the UK, or if you basically go to Suica in Switzerland, SBB, Generali, you will see in all these bots, we always ask for the customer feedback. So let me delve a little more into one of the use cases, which we've done with Generali. Generali in Switzerland gets more than a few million customer requests every year. What we basically worked with them on is an omni-channel strategy to understand their customers' requests irrespective of channel, and then automate all those requests across channels to really provide the highest satisfaction scores for their customers while improving and bringing savings up to millions of dollars. That's what we want to provide to all enterprises, and that's what we strongly believe we can. We've now been in business for about 3.5 years. We've been doubling our revenue every year. We're now 52 people, and we're looking to continue to add both geographies and number of resources. So if you are interested in joining our journey, or if you're looking at automating your contact center, then please get in touch with us. I'm Pranay Jain. My email ID is pranay@enterprisebot.org. Look forward to hearing from you. Cheers.
Hi everyone, I'm Rico Blazer, co-founder and CEO of a Swiss fintech company called Vester. Last November, I had the opportunity to visit the beautiful country of Singapore to attend the fintech festival in person. Unfortunately, this wasn't possible for the 2020 edition, but I'm all the more excited about the opportunity to introduce our company to all of you in this virtual fashion. Vester is the engine behind active management. Let's have a look. So why do we consider ourselves the engine behind active management? Well, our company was founded less than 3 years ago, and today on our technology platform, literally hundreds of professional money managers are already transacting billions of dollars every single year. What is interesting is that many of these asset managers using our platform on a daily basis don't even know that Vestor is the underlying engine that makes it all possible. This is because our business-to-business platform is white-labeled and offered to institutional clients to help them improve their offering for their clients. Here are some quick impressions of our software as a service platform. The platform supports many different asset classes and provides advanced portfolio rebalancing capabilities, as well as an intuitive interface for professional investors to manage and monitor their portfolios from anywhere and at any time. All of the actions on the platform are meticulously recorded, resulting in a perfect audit trail. This is a major breakthrough for any organization, particularly from a regulatory standpoint. On top of that, the platform offers a very flexible reporting framework, which allows asset managers to be completely in charge not only of their products, but also of the way they present themselves to their investors. We work with large international banks, private banks, smaller regional banks, providers of special purpose vehicles, and even players in the crypto space. So regardless of asset class, we are the go-to partner. Clients prefer to work with us rather than building a solution from scratch. And this is because they can significantly speed up their time to market while potentially saving millions in development costs. In other words, our solution lowers the barrier to entry and reduces both implementation and operational risks. At present, our largest investor is SIX Swiss Exchange, and our customer base and operations are entirely based in Europe. However, that is about to change. I'm very excited to announce right here at the FinTech Festival that in spring of next year, we're opening a presence in Singapore. Since 2016, we're observing a tremendous growth in actively managed investments globally, but particularly in Singapore and Hong Kong. It's $1 trillion market by now. It is very important to me that our technology is not just available to European asset managers and issuers, but also to Asian players. So to summarize, if you're an issuer or asset manager looking to simplify your processes, please get in touch with me. For our expansion to Singapore, we're also looking for a venture capitalist or corporate investor who would like to help us bring our offering to Asia. Please visit vestor.com for more information and stay healthy. I'm very much looking forward to seeing all of you again in person next year. Thank you very much.
Welcome to this special podcast with Daniel Siegers, Yin Yan, and Senat Celebic. I will allow everyone to introduce himself a little bit. We're starting today with Senat. Can you introduce yourself to the audience?
Thank you very much. Hello, everybody. My name is Senat Celebic. I'm from the bank Julius Baer, and within Julius Baer, I'm responsible for collaboration with the fintechs and the startups, and therefore I'm the arm of Julius Baer here at the F10.
Thank you. Yin, would you like to introduce yourself?
Sure. So my name's Yin. I'm a senior investment manager with SIX FinTech Ventures, the VC arm of SIX. We invest in early stage fintech startups, sort of sweet spot wise, seed and Series A.
Thank you. Daniel, it's your turn.
Yes, hi, I'm Daniel. I'm looking after innovation and strategy topics at UBS, Group COO. And recently we launched UBS Next, which is our initiative to make strategic investments into fintech.
Thank you. And about me, I'm Spiros Magaris, a venture capitalist. Most people know me in the fintech space, so I will concentrate on my guests. So I have some questions. I will ask you first, Senat, and at the end I will have a question which we all can contribute. But the one question I wrote down here, what level of support can incubators and accelerators offer to incumbents?
So from my experience in the past 5 years working here at the F10, incubators and accelerators in general can offer benefits in multiple dimensions. The first one is obvious. They offer you a platform where you can meet a high number of startups covering multiple areas, new technologies, and interesting and relevant capabilities. Now, in addition to that, they can also support you in topics like trend scouting, doing research on raising technologies and how it can be applied, just as an example. They can also support you, before a collaboration starts. They can also support you and coach you how to identify, together with the fintechs, how to identify relevant use cases and how collaboration can be set up to be successful. One topic which I believe is very much underestimated when talking about platforms such as F10 is the cultural spillover they can have for the incumbents. Innovation has very much to do with an organization's culture and values. The F10 offers me the possibility to bring many of the relevant stakeholders to the F10 premises, to connect here to the network, to meet the startup coaches and the mentors, have exchanges with the startups and the mentors. We can also conduct innovation workshops here in the F10 premises. And this gives us powerful means to transport this experience here back into our organization. Such exchanges and experiences help me really a lot when it comes to setting up new collaborations and to convince our internal stakeholders to do such a collaboration with a fintech.
Yin, I have a question. Are startups that go through the structured programs more attractive for you as an investor? And what are the qualities you're paying attention to when you look at these potential investments?
Sure, thanks. Very good questions. I think there are really huge benefits that startups can get from going through a structured program, such as the ones offered by the F10. Especially in fintech, the sales cycles are very long, and it can take hundreds of meetings before you're actually speaking to the right person at the bank. So what F10 provides, for instance, is direct access to the corporates, so you can get direct feedback on your product and to find that product market fit, and to have those first conversations around a POC, and then get the early traction, which obviously investors love. And then secondly, I think going through a program can be hugely helpful, especially because as a first-time founder, you're basically overwhelmed with the number of tasks at hand, right? So it's great to be able to follow a tried and tested formula, to be able to make sure that you're meeting, you're focusing and prioritizing the tasks, so that you can really focus on what's important. And it's, with data, we've shown that the F10 startups, they actually have a higher survival rate because they have that structured approach. And then thirdly, I think it's really important to, actually there is a little bit of an art in knowing how to talk and tell your story to investors. And that kind of coaching and mentoring is really important. And that's something that you get from the F10 program. So in terms of what qualities we look for when we analyze a potential investment opportunity, I mean, those are, pretty standard things. So obviously we look at the market, so how big the market opportunity is, and also importantly, sort of where does the business play along the value chain, and which part of the value chain is most value creating, and if that's the part that you're actually targeting. Obviously, we look at the team, if there's, if the founders, if they're complementary to each other, right? And what we really like is, which we've actually seen quite a lot of from the F10 program, is that founders, they come to the program with a problem that they're really genuinely sort of excited about, and typically a problem that they've experienced in their previous job. So really kind of, there's that founder market fit, which is something that's great. And then obviously, the product has to be good, that it's loved, and that there is maybe some kind of cutting edge technology behind.
Thank you very much. Now we're coming to Daniel. I mean, there was some publicity about the venture fund, but I think there's much more going on at UBS regarding fintech. What can you say about this, Daniel?
Yeah, absolutely. And thank you. I think it was a very interesting insights already. I think at UBS, we really think of kind of fintechs as one key kind of lever that we have to drive innovation. And we've been engaging obviously with startups and fintechs for many years. And I think what's really helping us and how we think about it is we identified really clear formats to engage with fintechs. And there's various, and they depend really on kind of what the outcome should be and on the stage of the startups really. So for instance, we have the Future of Finance Challenge. So that's kind of a competition for the best ideas on how to transform finance and the financial industry, which we've run since 2015. So that's more for like early stage and seed companies, for really the ones that want their ideas challenged. We have also, and I think Yin mentioned it as well, engaged on various occasions in proof of concept, so POCs, where we really get our hands dirty and try solutions in a real life environment in a big bank, together with our business colleagues, with colleagues from technology, to really get the solutions going and see how it goes. And now, as you mentioned, recently we launched UBS Next, which is our initiative to engage even closer with startups, where we take actually direct equity investments. And this is really to stay strategically engaged. So really kind of find the startups where we think there's a potential for strategic collaboration from both sides, right? So it's really about kind of unlocking the value for UBS, yes, but also for the startups in terms of their development and kind of staying engaged with a global bank, and bringing kind of the right experts from the organization to the table. And I think this is what we're looking at now. So this is really starting, let's say, from Series A. So when there is really a clear idea already, and this is something that we really want to push now, and where we want to accelerate really the engagement we have with startups and the startup ecosystem.
Thank you. Now I'm coming back to you, Senat. How does Julius Baer approach collaborations with startups?
I have learned in the past 5 years, there is no particular approach which always is successful. I mean, it depends very much on the startup team, the potential use cases, but also on the relevant stakeholders inside of our organization. Each collaboration that we have done in the past and are doing right now are different in the setup, the approach, and also the achieved benefits. So it really depends on the use case. It's not a formula or a scheme which you can tick off the main topics and then it's successful. That doesn't exist. That's my experience.
And a question for all of you: what are the key elements that reveal a promising collaboration in your experience?
The way we think about it is, when we make an investment, that's really at the beginning of a very long working relationship. And for that relationship to work, there needs to be a sort of a fit, right? Like a personal fit between the founder and the investor. I think that's really important. And that there's trust, open communication, right? Both parties not trying to hide or information or agenda. And I mean, the way we work, for instance, is very hands-on. So we like to be there. We're not micromanaging your business, but we want to be there, be really supportive. And that has to be also the style of working that is appreciated by the founders. And then we always tell actually the founders we speak to that it's actually not just about us choosing you, but it's also that you have to choose us, right? And make sure that you're picking the right investors, because there's a lot of capital out there, but what is important is to have smart capital. So think about, what are some of the things that you can get from us that you can't get elsewhere. So in the case of Six, we're not just a traditional VC investor, and on top of all the kind of VC investor value add that we can provide, we are also affiliated with all the banks, right? Both here in Switzerland and also in Spain with the acquisition of BNE. So the access to the banks and also the wider sort of financial ecosystem is something that you can get from us. On top of having Six, which is a quality stamp and can instill trust and help you in conversations with banks, financial institutions out there.
Daniel, it's your turn to reveal the promising elements of collaborations.
Yeah, that's a very good question, and I really liked a lot of what Yini also said, and I agree with my colleague that there's not really the one solution, right? But what is really key, I think, is in finding the question to why do you want to collaborate beyond obviously the money. So I think it's really about finding strategic value for both sides. So I know that we are very keen on understanding when engaging with a fintech or startup, like who are we dealing with? Yes, on a personal level, but also how does this fit into our broader strategy? How does this help us? But how can we also help the startup to grow? And I think it's really about finding this fit in terms of, I think, we call it smart capital. So I would like to think about it in this way, to really find that fit and see how we can help each other, because it's not only about kind of a business transaction, but it's really about growing together and learning on both sides. And I think for this to work, what is really key is to kind of have the clear expectation from the beginning, right? To really not to ask the right questions, to be very open and transparent, and have a very close engagement throughout the circle. And I think that's key to me. So finding the right fit and really working closely together.
After hearing the responses of Yin and Daniel, is there something you would like to add what they said? And what's your approach of collaboration with startups at Julius Baer?
I mean, the most of the topics, they have already been covered by Daniel and Yin. I fully agree what's been said. Maybe just one additional element, what I see is the openness of our internal stakeholders to run experimental collaborations. When you run such an experiment with a fintech or a startup, the benefits are not always fully clear at the very beginning and only materialize during the collaboration. And not all stakeholders can deal with these characteristics. Besides that, all my important topics have already been discussed.
Thank you very much for this podcast. I want to thank Daniel, Yin, and Senat for being part of this. And I hope it was as insightful for you as it was for me. And thanks for taking the time to be at this podcast.